let's see how we go. I'm just going to go ahead and get started.
Before we get started, Mark, just to let you know, I have a link to share towards the end.
The Trader Playbook.
Yep.
Okay, good. Okay, good. Yes, hello everybody. Welcome to the second day of my 4-day trade execution webinar series. This is a live webinar. I've subtitled this How to Capitalize on Monster Moves in the Markets and Avoid Market Traps. My name again is Mark Shawson, the Pattern Trader. I started telling you a little bit that I evaluate every investment opportunity. Doesn't matter if it's in FX, gold, crude oil, interest rates, soybeans, orange juice, natural gas. I look at everything from a price standpoint, what we call technical analysis. So I look at price patterns to tell me which way the market is likely to go, and then I just try and get in sync with that event. As I said, I started the Pattern Trader to kind of educate people and inform people on price action, but I'm at heart, first off, a trader number one. So I do have this business. I love it. I love talking to people. People say, well, if you're making all this money, why would you bother doing this? It's a very legitimate question. But frankly, I'm watching the markets all day long, every day. It's fun to make money, but it's actually more gratifying to help people, talk to people all over the world. I didn't realize when I started the Pattern Trader, I'd actually inherit a second family. And I've known people for years that have been in some of my, forums and webinars. So it's really fun. It's very gratifying. But I'm a trader first at heart. So, what I'll do is I'll, share with you a couple of my, I like to show the good, the bad, and the ugly. There's theory and then there's practice. So yesterday, these were my positions. I showed you that I was basically long Moderna. I was up 22,000 in that. I was short Peloton, 10,000. I took profits in that. Took actually about 50,000 cumulative profits in both those. And my long-term, kind of position here, I've been short QuantumScape from $29.75. And today it hit like $23.20. And I'm still in it. And then I'm in these puts, the $25 strike that expired at the end of this week. And I was up about 182,000, took about 30,000 off the board. And then today, you can see now I'm up 208,000, doesn't include about 50, 60,000 in bank profits. My profits have gone greater on these puts. I'm still in this QuantumScape. You can see it closed at 23.21. I'm making about 182 plus 60, about $250,000 in QuantumScape. And then I'm down a bunch on these Uber calls. I'm getting just cratered. They're going to probably go off the board worthless. I've got these triple Q puts, which are a bet on the NASDAQ going lower. We'll see what happens. We've got a big Fed meeting tomorrow. Jay Powell will speak, and I think the market's going to react pretty big, whatever he says. And then I've got these puts on Beyond Meat. They were kind of way out of the market, but, starting to catch up today. Beyond Meat was down about $3. So we'll see how we go there. So I'm up about 208,000 in this account. And then I got another account where I'm up $240,000. I'm also short, 30,000 shares of QuantumScape in this account. I've got an open profit of 163,000. And then I'm also long these put options in QuantumScape and up 62,000 there. So all told, probably up $500,000 in QuantumScape. This little obscure, stupid company. I've just made so much money on it. I'm going to really miss it when it goes off the board, which it looks like it's going to do pretty soon. Yeah, you hear all that lightning out there? I'm going to lose power. I just know it. And then today's FX profits, I'm long all of these British pound versus New Zealand dollar trading pairs. It went a little bit better than yesterday, up about 154. And you can see I've been in this position since May 12th. So I've been in this thing 2 months. And I suspect if we come back 2 months from now, I'll still be in this position. So I look at everything from a price action, action trading point, price pattern trading point. So I'll kind of go through, what I'm looking at today. My email should have gone out just a moment ago. I'll share whatever I sent today. Let me see if it went out. Has it gone out yet? So it usually goes out right now around 4:30, so it may not be in my inbox just yet. There it is. So let me it's got my personal email on here, so let me just take that out. All right, so this is the email that I sent out to those on our daily email list. It was in the euro yen. You can see that, all my emails include a picture, including a description of what I'm looking at. So this is not designed to be a signal service. Everybody kind of focuses on this. What's the trade? Is it going to win? Is it going to lose? And really what you should be doing is focusing on the information, what I'm looking at and how I'm analyzing it. Doesn't matter if I'm right or wrong. I learn more from my losses than I do my wins. And so this was to put a sell stop in the euro yen. And I'll show you what I'm looking at on the real-time chart of the euro yen. And then this is my open position. You can see I've got open positions in pound New Zealand. I'm short BYND stock, and I'm also short the stock of ZM, Zoom, and cumulatively up 585 pips. So I kind of so Beyond Meat is $1.60 in my favor, and I just use the pips analogy to make it an apples to oranges comparison with FX trades, but you don't really have pips in stocks. So this is so this is the stock of QuantumScape. You can see it's went to an all-time new low here for last year or so, and I've been short since $30. I've been shorting it all the way down, actually. And you can see, now why. You just look for a downtrend and get in sync with that. So this is the euro yen. It's at a pretty tricky inflection point. What I like to do is kind of see the big picture of what's going on. If you're looking at a 15-minute chart, you cannot see a picture like this. So this is the euro versus the Japanese yen on a monthly chart. I'll whittle back, show you the monthly, the weekly, and the daily. And this is kind of what I do. I, kind of toggle in between these time frames. Really what I'm trying to determine is where's the next big play? Where's the next direction that I can hop aboard, take 300 pips, 500 pips, 800 pips, 1,000 pips out of the trade. I'm not looking to take 15 pips out of a trade on a 15-minute bar. So you can see that the euro yen has been trading within this symmetrical triangle. And we recently broke out of here, and this is looking like a bull trap, meaning that all the bulls who chase this breakout are going to be trapped if we start moving back into this triangle. And when these traps are sprung, they can uncoil big time the other way. You saw how I made 7 figures in a trap that was sprung in Beyond Meat a couple of weeks ago. So I think that this is just a breakout that is a false breakout. Now, to my mind, there's a series of patterns that kind of told me that this was going to be a tricky area to break through on on the upside. So you can see on the monthly, we have this kind of head and shoulders. It looks like a man or woman's left shoulder, the head, and the right shoulder. So that is a bear price pattern. And then we have a double top here, and that is also a bear price pattern. So I kind of had difficulty thinking that the market would kind of just clear through these patterns like a knife through butter. And so this is a long-term primary secular downtrend. The trend has been lower, and now it looks like we're going back in the direction of the trend. So, again, what I want to do is just provide some context to see how, you can start anticipating what could be a big move one way or another. And that's what I'm looking for, these bigger, broader moves. So that's the monthly chart in the euro yen. This is the weekly chart. And you can see we hit this. Let me just peel out of here a little bit. We hit this resistance point. right here. So when the market hits these resistance points, not surprising or astonishing that it doesn't go through like a knife through butter. So you can see how, you know, when it hit this major resistance level, it just got kicked back. And so the question now, is it just kind of consolidating for a bigger move higher, you know, or is it going to roll lower? And it's still kind of an open question. You can see that recently we had this very strong uptrend line, but just recently it started to get penetrated. So you can see now how we just broke through, and some of these lines are somewhat arbitrary. You know, it could easily kind of go back up here and then through here. So it could just be a false breakout to the downside, but I don't think so. Now the question is, you know, does it come straight down or does it kind of build a little bit of history before? So it's in a tricky area right now, but this thing looks like it's, you know, starting to come apart. And, you know, this looks like formidable resistance here. So this one is not easy. But, you know, I think it's at an interesting point where you can put a toe in the water. So now this is the daily. And, you know, you can see that I looked at the monthly, the daily, and the weekly. I didn't look at the 5-minute, the 15-minute, and the 1 hour. And there are also no indicators. So you can see on this chart, it's what I call a clean or a naked chart. And the reason why we call it a naked chart is because there are no indicators. There's no volume. There's no moving average. There's no, you know, MACD. There's no, you know, Bollinger Bands. There's nothing on this chart but price and time. So from this picture, you know, to me, it's the old saying, a picture is worth 1,000 words. And, you know, what I'm seeing shaping up here, and, you know, sometimes I just see these things early where you can see this looks like a double top. Now, the tops don't have to be in the same area. You see you have a top here and a top here. But to me, you know, if you stand back, this looks like what could be an M top. And then whenever we see an M top, it's a reversal from an uptrend. And with the word reversal, it means it's going to reverse an uptrend and turn into a downtrend. And so this is kind of what it's starting to look like to me. Now, you know, you see these shapes, and what I do is I try and wait for a, you know, a set of days or a certain day where I can start understanding how to join, you know, the side of a trade that I'm looking at, you know, both to get in sync with the momentum and also understand the risk. And, you know, I call those insurance bar days because they tell me where to join the trade and where my risk is. So there's two forms of insurance day bars, and this should have been in your registration package, where you either have what's called a key reversal, where the market makes a new high and closes on the low, or you have an inside day bar, or you have a combination. So you can see today we have this key reversal where earlier in the day it went higher, and by the end of the day it closed on the low of the day. So now once I kind of think that I have my pattern, I have the direction, I have the key reversal, then I layer this 4-step trading methodology plan with an execution that says I'm looking to confirm this. So I suggested to put a sell stop at 130.17. So you can see it's currently trading about 130.31. So a little bit, a hair under today's low. And so, you know, if, you know, the session closes and then it goes straight up tomorrow, then no harm, no foul, we won't be triggered. So what I like to do is have the market confirm what I'm looking at. So, you know, the market could kind of go open, you know, yes, you know, in tomorrow's session. And then if it comes and picks me up, then I'm likely put into a nice trade. So I wait for the market to confirm what I'm looking at. So all of my prior analysis is pretty subjective. And then the fourth step is basically I put an order. I'm waiting for the market to confirm the momentum I'm looking at. And so this is, you know, an anatomy of a trade setup. Sorry, I have to take this real quick, Dwight. Give me one. Sorry, guys, that was a doctor. I'm, having some issues, and I don't want to keep missing their office. So, thanks for that. Um, so that's really the anatomy of a yen trade. So Mustafa says, I'm short pound yen, currently on a loss. I've never made a meaningful profit on yen pairs, and generally a small loss. Maybe euro yen will be a good. So look, I mean, it's like if you toss a coin 99 times and it comes up, one way, it doesn't mean that it's going to come up the other way. So, I look at each trade, based on its own distinct, risk reward. And so what I try and do is understand, okay, where is a legitimate place where I can look to join the momentum of something, and then also how and where to assess my risk. So I would simply just place a stop loss, right here. So this is my potential risk, and that could be my reward. So I look at each trade from a risk reward standpoint, and if you risk just a 0.5% on this, it doesn't matter how big your stop loss is. So that's about 100 pips. In a minute, I'm going to show you a position size calculator so you can size your positions correctly. And so you could take a 0.25% risk, a 0.5% risk, and even if it gets banged out, you've lost a 0.5% risk. But guess what? If this turns out to be correct, you could make 10%. So I look at everything from a risk reward standpoint. And so what I'm trying to do is showing you an anatomy, how I use price to set up trades. So I could have been looking at QuantumScape, a week ago, where I was looking at the same setup where I saw this reversal, I sold into it, and now QuantumScape is down there. So it doesn't matter what this instrument is, doesn't matter if it's a yen pair, it doesn't matter if it's a New Zealand dollar versus Canadian, the pound versus, I'm just trying to show you a way of looking at prices to try and use that structure to set up risk reward trades. So Natalia says stop loss above the low, pending order below. So in the event of something you're looking to sell, yes, the sell stop would be underneath the low, and the stop loss would be above the high. Now it would be the reverse if this was a buy. So let's say you have a key reversal here, you're looking to buy, so you'd put the buy stop above and you put your stop loss below. So, obviously for something you're looking to buy, you're looking for it to confirm the momentum by going higher. Something you're looking to sell, you're looking to confirm the momentum by going lower. And so here was a perfect example of these inside day bars. So you can see there was actually two. One, two. Both of these bars sat within the range of that bar right there. So you had this double inside day bar coil. All you had to do was sneak a sell stop right underneath here and let the market do all the work. So you can see in this particular day, trying to use a color that we could see. In this particular day, the market went higher and then curled around, triggered the sell stop, and you're into this trade. You made 200 pips without even blinking. So this is how I use the market to set up these market orders. So can everyone see this little coil here? These two inside bars, where literally the range of those two bars sat within. And since I would have surmised that things started to come down. So this is how, and you can see how these coil bars, they're just energy. They just store energy. So you can see this was storing energy, and then the energy just unleashed to the downside. And so this is how I use price structure to just make an enormous amount on the market. So Kate says, can you please say the number? So where was my email? So here is, I put a sell stop at 130.17. I put a stop loss at 131.17, 131.11. So that's what a 90, whatever, four, I don't know, six, something like a 94 pip stop loss for, a 400 pip take profit. So that's like a 3 or 4 to 1 a risk reward. And I'll actually now set this up on a position size calculator. So I'm going to show you how you can manage your risk no matter what size account you have. So everyone says, well, I can't, make these 400 pip things. I can't risk, 94 pips on a profit on a position. Well, of course not. If you use your current positions, you can't. But this calculator, so I'm going to put this in the chat box so you don't have to scribble down. So this is exactly what it sounds like. This is a position size calculator. So this is going to tell you exactly how big a position you have for any given level of risk. So you can use this calculator with any major currency around the world. I'm going to assume a US dollar account. Let's just assume a $2,000 account. It doesn't matter if it's $2,000, $20,000, $200,000. It's the same risk, because right in this box where it says risk ratio, this is where you're going to put how much you're willing to risk in percentage. And I typically say you shouldn't risk more than anywhere between 0.5%, and if you really like something, up to maybe 2%. So that means if you risk 2% of your $2,000 account, you're going to risk $40. So big deal. Even if you lose that $40, you're going to live to fight another day. But some of you are doing 3-5% risk on an individual trade. And if you get 10 bad trades in a row, you're already down 50%. So if you're risking 0.5%, and it's expressed at 0.05, you could get 10 bad trades in a row and you still only be down 5% in your account. And this is the difference. This is how the pros, so the whole point in this business is to survive. If you're down 30 or 60%, now you got to make 100% just to get back to even. So the whole discipline of trading is, you got to, the cardinal rule is you got to, be able to come back another day. And most people wipe themselves out because they don't understand the principles of risk management. So we've just looked at this euro yen trade. So I come here. Where's the euro yen? Euro, come on. Where is this thing? There it is, right there. There's the euro yen. And I said we're going to risk whatever, 96 pips. It could be 196 pips. It doesn't matter. So we set up our trade. This is what you're setting. This is what you're establishing up front. How much you're willing to risk on this trade. So it's a tricky trade. So you don't want to risk too much. So you're going to risk 0.5%. You've got 96 pip stop loss. And now you're going to trade in probably a mini or micro lot. So a mini lot is expressed in 10,000 units. A micro lot is 1,000. You have to make sure that you have a broker that does micro lots. So let's assume it's a mini lot. I'm going to hit calculate. And so, yeah, it doesn't even give you. You have to do it in micro lots. This thing has kind of gone funky on me. It doesn't work anymore. They've changed the parameters, and something has changed on this. And so I might just go and use another risk calculator in the future. Stop loss is 96. Trade size lots 1. Yeah, so I'm not sure what they mean by one lot equals 100,000. So they're only doing it on a normal lot. So let me just .1 lots. Yeah, so you can do 1.12 lots. And so this tells you, how to size. So you put 0.12 lots and you're risking effectively $10 because that's 0.5% of 2,000. And so even if you have a bigger account, let's say 20,000, your risk is still 0.5%. And in this case, you're risking $100. It's still 0.5% of 20,000. And in this case, you can do 1.15 lots. So this is how you use this calculator. And they've changed, you can swap with money. So you can, instead of putting 0.5%, you could say, okay, I'm willing to risk $100 on this trade. You hit calculate, and it still really comes down to the same thing, 1.15 lots. So it doesn't matter if you have 20,000, 200,000, or 2,000, you can calculate your risk. And it's just a question of adjusting your position size so that it equates to your risk. And so this is a tricky, it could go up, it could go down. I said risk 1%. I think if this works, it could really fall out of bed here, but perhaps should have been a little bit more cautious about that. But even 1%, is not going to wipe you out. And the thing that you'll notice is that I give this latitude or room to breathe. So a lot of people are trading with 10 pips, stop losses, or 15 or 20, and they think, well, if I just put my stop loss in, I'm being a good boy and what have you. But if you put a 20 pip stop loss in a market that's moving 150 pips a day, you're just going to die a death of 1,000 paper cuts. You're just going to bleed to death. So I put, in this case, a 96 pip stop loss. In some cases, like the pound New Zealand dollar, my stop losses were 400 pips away. Pound New Zealand, my entry is 196.11. My stop loss is 193.27. It was, 300 pips away. So, that means is that you do a smaller lot size, but you can, take part of these bigger moves. And that's the thing. It's like everybody is trying to use, a 15-minute chart to try and extract, 10 pip, 10 pip trades out of a bar. So, they'll pull up a chair, they'll, look at this daily bar, pull up a 15-minute chart and try and do 5 trades a day, trying to take 7 pips or 15 pips out of the market, where I'm trying to do 1 trade and take 300 pips out of the market. And so there is a cost to trading, right? So you do incur what's called these swap fees, which is an additional fee that the broker will charge you for holding the trade. But you are also paying a hidden fee every day in terms of the spread. So every day you're paying 3, 4, 5 pips on the euro-yen pair between the bid and the offer, between where you can buy and sell. It's kind of that hidden, let me see what the spread is right now. And mine, it's trading 130.27 by 130.31. So it's 4 pips. So every time you trade, you're paying a 4 pips spread. So if you're in and out 5 times a day, you're paying 20 pips a day in this hidden fee. And if you're trading 5 times a day times 25 times a month, you're trading 125 times during the month times this 4 pips. It starts adding up. Whereas if you just trade once and you look for 300 pips on this, yes, you'll pay a swap fee, but it'll be less than paying all these commissions on trades that you're probably going to end up losing on. So it's just math. What I try and demonstrate here is this is a little bit different. So you can see that I have been in QuantumScape now for, I don't know, a week and a half, just sitting in this trade while it works for me every day. I've been sitting in these pound New Zealand trades while it's just working for me every day. Instead of being in and out trying to snatch, 10 pips here and, 20 pips there. So if you're trying to take 15 pips out of the market and you got to risk 10 to 15 pips, you also got to overcome this spread of 2 or 3 pips. You have a 1-to-1 risk reward. So that means, for every time you win 15 pips, you're also losing 50. It's like, being at the casino where you put all your chips on the table, you either win or lose. They take away your chips or you make double what you made. So it's a 1-to-1 risk reward. And in this scenario, you do have to win 90% of your trades. But if you can set up your things with a 3-to-1 risk reward ratio, where if you're going to risk 50 pips, you have 150 pip outcome, you could actually lose 72% of your trades. So isn't that great? Everyone, thinks I have to win on every trade, but if you have a 3-to-1 risk reward, you can lose 3/4 of your trade and still make money. So it's it's a misleading percentage. Whenever you go and ask, money manager or trader or a system, what percentage of traders you win? So most of these expert advisors show you they win 80%, 90% of their trades. What it doesn't show you is that the 2% of trades that they lose on is going to wipe your whole account out. Whereas sometimes I can, win 30, 40% of my trades, and I'm just, up huge, because this is the one trade that's been working for me. I've been just sitting on this one trade in QuantumScape. So you can see I've got, losses here, losses there, but they're dwarfed by this one trade that I've been sitting in for a week and a half. I got short at 29.75. It's at 23.21 now. And I'll just sit in this thing, forever. So does that make sense to you guys? Kind of money management using a trade calculator. Mehmet says, I wonder what percentage you gain on average following a position size calculator discipline every year. So this is the whole thing to trading, is looking at trades where you have a much bigger outcome than a risk. So I look at everything in terms of risk, right? And if I can get comfortable with the risk, then I'll do a bigger position. So when I was doing these trades in QuantumScape, and again, whether you trade this or you don't trade it or what have you, I'm just trying to make a point here. And you can use this to, any trading instrument. So it's all about the risk, right? So I was on one of these webinars a couple months ago. And I think Mustafa as well, a few others may have been on there, where I said right here, I said that there, it closed. So after this thing closed here, I said at that time that there was no risk in this stock being short, meaning that I just saw no chance that this thing could go higher. And you can see that was it's never been higher than that. It's been straight down since then. And then there's been a whole bunch of times this double top here, and then this double top here. So there was a couple of Thursdays ago, you had two key reversals, made a new high, close on the low, made a new high, close on the low. So I use these reversals to understand, okay, this is where my risk is. So if I want to join this trade, how do I get in this thing and so I understood by getting in here that this was my risk. And so if I can understand my risk, where this is going to go, what time frame, when, how long, where is it going to go, that part I can control. What I could control when I got in here is understanding what my risk was. And if you can get into trades where you can understand that your risk is very small for a big acceptable outcome, that's how you make money in trading. It's all about understanding levels where your risks are. So right here, there was a double top right here, and then you had an inside bar right there. And I simply put my trade on right here. I think Mustafa and a few others were on this trade. It was around $37, and I rode this all the way to 24 bucks. So to me, there was getting in here. This was my risk, and that was my reward. And so if you can set up trades with these kind of probabilities, you don't have to be right every time. You know, you can be right twice a year and make your entire year on what I made in that trade. And then I just did it again now. So it's all about understanding your risk. And I use price structure, a combination of patterns and price action, to assess my risk. So Richard says, what would make you get out of QuantumScape? I get the risk part, but how do you arrive at targets? So I think we discussed this yesterday. So I would look for the same thing that got me in. I'd look for a pattern or a price action. So you can see right here, I thought that we were going to go to this low that we're going to go to at this juncture. I showed you Zoom yesterday. And you can see we made a new low here. And then in this day, we kind of had this massive reversal right at that low. So you had a double bottom and you had this key reversal. And it started to give me a feeling that, I don't want to be short in here. You could see now you had a couple of reversals right there. And then you had this short covering rally right there. So I actually cleared out whenever, so on this bar, I just got out of my position. And it would be the same thing here. If all of a sudden, we cratered and then all of a sudden, the market kind of gives me a look, something like that. Now, obviously, things can only go to zero. At some point, the risk reward, staying short a trade, doesn't make sense. I think this is going to $10. So I think I could still double my money from here. And this has got no signs of, any kind of support here. In fact, we've just broken every level of support that this stock has. You can see that in the past year, it's never been lower. We just broke it today. We closed under the all-time low today. So where's the support going to come from? The answer is nowhere. The cavalry is not coming on this one. So, but look, I would look for some kind of price action or a combination. But even if this thing goes down, shows you it's going to support, it's going to be a dead cat bounce before it goes down again. This thing is never coming back. I know that's a big statement, but this thing is DOA, dead on arrival. There's just nothing to save this chart anymore. It's gone. That's why I love this chart. It looks like nothing, but I have just made a living on this and then some. Combination of these double tops here, double tops there, double tops there, double tops there, double tops there. It's just been, like shooting ducks in a barrel. No insult to pet lovers out there. So Mustafa said, you mentioned a $20 target not too long ago, and it's not far off. So yeah, I think, well, look, I've got these put options and I would love it just to go to $20. I would make 500 grand just on the put options. So I'd love to see that by the end of the week. But I think, I'm just going to keep the stock. I've got 60,000 shares short the stock, and I don't see, why I would take those off. I'd let it go to 18, 15, 10. This thing is just, I don't know where it's going to go in what time frame. But I knew when I got in what my risk was. Same thing yesterday. You had a key reversal yesterday. You could have shorted it under today's low. And this is your risk and that's your reward. So again, I just use a price structure. So I assess first off, what is happening on any particular chart. So I think without doubt, we can say this is in a downtrend. Then once I understand the trend, then I look for a pattern that's directing traffic here. And here you see this big M top. Then you can look for your price action. You see a key reversal here yesterday. Then you put your sell stop under yesterday's low, and now you're in this trade. So this is how I, the anatomy of every single trade I do. And I try and drill or find, charts where I can understand the risk reward better than others. So John says, you said the exact same thing 2 webinars ago. I know I did. And this thing's been going down, John, ever since that webinar 2 webinars ago. So I said on that webinar when it was at $45, now it's in half. So, and I'll say it now, in 2 webinars from now, we'll be in half from here and it'll be $12. Pretty confident of that. And, again, I don't know what's going on with the company. I don't look at the balance sheet, the price earnings, what their sales are. I can only look at the price action, and the market is a discounting. The market is ahead of events. So the market is telling me where the market is likely to go. MV says, I have a moral reservation about shorting as I do not like profiting from failing companies in negative energy. So making money there's no good or bad. You're not a good person or a bad person. And in fact, I think shorting a company or being able to short a company is, so first off, if there were no shorts, there's all the participants create, first off, transparency. So if a company is a fraud, right? This is a fraud. I'm convinced it's a fraud. So the shorts are basically exposing, what's wrong with this company. And so to me, there's no moral hazards. Making money on the upside, that could be wrong. You've got mothers who've got 2 jobs, washing dishes, making $16,000 a year. Why should I be able to buy this and make, $50,000 on this up thing? Is that moral or immoral? There are no, it's not a question of, immorality or not immorality. But I think that being, shorting plays a vital function in the market. And I think it's been gamified because, the shorts have been terrified by virtue of things like GameStop, where stock went from $4 to $500. So you can see that this thing went from whatever, 20 bucks in this time frame to 400. And now all of these stocks are going to come back to where they're supposed to be, back to 40 bucks. And this thing is going back to, but now this is an example of how shorting got out of hand, how markets identified companies with big short interests because they were piece of crap companies in the first place and they should have been shorted. And this is just a mechanics thing. But we're going to return back to earth, and this thing will be probably at 20 bucks again. This is GameStop, GME. It's just a question of time before everybody was going to lose their money here. Here's this kind of head and shoulders, and this thing needs to be shorted because it's not a real company. It has no earnings. It's deceiving the public. So this company has been raising hundreds of millions of dollars, AMC, on the backs of this improper trading action, where hedge funds and some collusion has happened where it raided the shorts, but the shorts were doing this company a favor because this is an albatross company with an upside down balance sheet that probably should be out of business. And so shorting this company is actually doing a favor. It's not immoral. This company has got an upside down balance sheet. It's got negative shareholder equity, and yet it's got a $2 trillion market cap. It's just insane. So this is kind of a cup and handle top here. And this thing is just going to come back to where it belongs to, under $5. And there's nothing wrong with shorting that. This company has defrauded investors by being able to raise money here. And if people were stupid enough to do it, then they're just stupid. But, they should pay a price for being stupid. So it's not a question about morality. If there are inefficiencies, the market should expose it. It's pure transparency. So, it's all about making money, risk and reward, this game. And, if thing's going to go down, I'm going to, write it down. If it's going to go up, I'll make it go up. And the thing about markets is they go up, they go down a lot faster than they go up. Thank you, Roy. MV says many things, making it more clear. How can you search fast? So I'm always looking for the next QuantumScape. There's many. I like this stock Run. I think this could be the next QuantumScape. Probably short that tomorrow. So again, you can see just a common theme. It doesn't matter what the ticker symbol is. This could be corn, natural gas, the dollar versus the Canadian dollar, what have you. I just analyze everything from a price standpoint. And it's, pattern direction. So I open up this chart and I say, well, what stands out about this chart? Is this thing going up or is it going down? So if I asked a 6-year-old, is this going up or is it going down? It's going down. Are there any patterns that are governing the price action? Well, here's a huge double top. So this tells me this is the governing price pattern. This is going to govern or dictate prices going forward. Now, it's not to say if something's going to go down that it can never go up, but I just look at these up moves as, opportunities to get short. So here's another double or triple top, and then here's all this key reversal price action. Made a new high, close on the low. Made a new high, close on the low. Today, you made a new high, close on the low. So it's just a no-brainer to put a sell stop under the low here tomorrow. Put your sell stop right here at 53 bucks. Put your stop loss above today's high at 56. So you got a $3 risk for what could be a $33 reward. Now I'll do that every day and Sunday. I might get stopped out and, oh well, I'll lose 0.5% to 1%. But I could also, I think this is going to be my next QuantumScape. Start writing this down to 15 bucks too. Yeah, Mustafa, AMC is, all of these things I think are over now. They had their run, AMC, GameStop, Bed Bath & Beyond. Haven't looked at that in a while. Bet you it's curling around. Yep, all of these things. You can see the huge key reversal on Bed Bath & Beyond. All of these things will be $5 and $10 again. Costs, department stores, all of these things were run up by these, raids where they took the shorts to the cleaners. And that's kind of been the problem, that if you were short, so you can see how costs went to 40 and now it's half and 20. And, in a month from now, it'll be a 10 KOSS. So all of these things are going night.
Mark, quick question from Wolfgang. When do you move your stop loss to break even? How far, how many pips?
It really depends on the trade, right? So certain trades, I'm like in and out, just for a quick thing, depending on what that thing's looking like. Something like Run or something like the Pound New Zealand, or QuantumScape, I had very big visions of, big moves. And so I'm very reticent to, I think I showed you my Pound New Zealand trades yesterday where my stop losses are way out of harm's way. And I still haven't moved them, even though I'm like 500, pips in profit on some of them. So this is Pound New Zealand, and, I'm just not in any rush to, to raise them. That's too big, sorry. So it really depends, this whole discussion of take profit and, stop loss. It's a difficult one only because every trade is different. So you can see that, Pound New Zealand is now trading at, almost 199, 198.70. And I'm in some of these things at 195. I've got 400 pips and my stop loss is all the way here. So, why wouldn't I just kind of move it there? Because I think this is going to go up another 2,000 pips from now. So, first off, I'm lazy. I just don't want to move it. And secondly, it was a good thing because you can see during all of these trades, all of these huge moves came down and my stop loss was still out of the way. So this could still come down here and, I would expect to go up. I think it's getting less and less of a risk. But so I'm not, why would I move it? I still feel like this is going to go a lot higher. And I don't want to cut off a trade. I don't want to cut off the potential of a trade. While I'm looking at this thing, you can see this intraday kind of looks like a double top, a double bottom here. And, I think it's just going to go a lot higher. So every trade is different. So, you may start off with a stop loss like I did on run. And then as it moves in your favor, I might move it, but, I can start seeing it working in my favor. So it's like, why, cut it off just because there may be some arbitrary thing. So it's a very difficult argument, discussion of where to put the stop loss. Really depends on what my objectives are for a trade. I mean, yesterday I shorted Peloton. I made $5 and I just got out. And I was lucky because the thing turned around by the end of the day. So I shorted Peloton yesterday at 120 on the opening. It went to 115 and I just got out. It's just because it's in a murky area here. I think it's going to go lower, but it's just, certain areas, certain risk rewards are better than others. I really like Zoom going in. I talked about Zoom yesterday. I shorted Zoom today, and you can see I shorted into a higher opening around 382, and it closed at 378. We talked a little bit about this yesterday. So tomorrow we have a Fed meeting tomorrow. The markets, I think, are going to get really volatile. Jerome Powell is going to, he's going to be dovish. He's going to say, I'm not moving interest rates. And whatever he says, I think it's going to be bearish. So you can see that Zoom is in this ascending, broadening price pattern. Now, two things can happen. We could grab a foothold right here and go straight up. Or if we break this, I know exactly where this thing is going to go, which is to the beginning of the pattern, at least around the 350 area. So that's where I think this is, going to go. I'm short. And, we also had these two key reversals here and here. So this really is my risk on Zoom, this 391. So today in a higher opening, I got short at 382. So this is my risk and that's my reward. And so if I'm wrong, I'm wrong. And, we'll find another trade. But, as long as you can kind of justify your parameters and then assign a competent risk to it. And as long, so what I'm trying to say is I can see a $30 to $50 minimum profit on this for an $8 risk. So that's what I'm trying to show you, is that I'm looking for these bigger moves. I'm trying to make 3 times the size of my risk on every trade. And I don't have to be right too many times to make a lot of money. You can see I'm just right on QuantumScape right now, and I'm making $500,000. So it's all about risk and reward. Munera says, what is the pattern on Zoom called? So this is a very interesting pattern. And I've made just a ton of money on this lately. I'll show you this on 2 different charts. It's called an ascending, broadening price pattern. So you can see it ascends throughout the pattern. It starts out life narrow and then broadens at the top. So it's an ascending and broadening price pattern. And when this breaks, we know the trajectory is right back to the beginning of the pattern. And so when it did this on pound Australian, about a year ago, I knew exactly where this thing was going. And I told our members exactly at that time. So this is the pound versus Australian. So again, you see these patterns. So I just showed you the same pattern on Zoom, a stock, and now we're looking at a currency. So it doesn't matter what you're trading. You can use this analysis. So I'm trying to find that color band that, all right. So ascending and broadening. So you can see it started out, it was ascending, started out very narrow, and then broadened and widened at the top. So I actually saw the top of this thing right at the top. It was a double top right here, and I started shorting it at 205. And then when it broke here, I said, this is done. We're going exactly to the beginning of the pattern. And look at this. It came right back to the beginning of the pattern. It dropped right back to the beginning. So, I use these, this is history. Now I did the same thing in gold. I think Mustafa will tell you I was bearish on gold when everybody was saying, gold's going to 3,000. I said it's going to $1,700 when it was at 2,100 for the same reason. Yeah, let me just peel out of this a little bit more. So this is a great example of how I use price structure to predict all kinds of moves. I don't use the news. I don't care about what Fed chairman is going to say tomorrow. The market knows. So this is the ascending broadening. So right here, when I saw these two key reversals, I said, we're coming right back to the low. And I took out 600 grand on that move. So where we go now, I still get the feeling we're going to crap out here, but it's still kind of a, in no man's land, and I have no position on gold right now. But this is an ascending broadening thing. So like I said, it's two things that can happen. You can find support here and then go that way. Or if you come this way, it means you're going to go a lot lower. Now it's hard to kind of imagine if we break this way, then, I would say it would come back to the beginning, $1,200. And as crazy as that sounds, it's conceivable. But the market will tell me one way or another, and then I'll just play that. Dakin says, brilliant. So it's just, you can go and find these chart patterns anywhere. I think what I bring to the table is what took me a long time in my evolution and maturity is that I used to just, see a double top and say, okay, this is a double top. I'm putting all my money here. And then it would go here, and then I'd be wiped out. And I go, what just happened? The textbook told me this was a double top. And so, the textbook's one thing and the market's another. So what I've learned is that I put my structure around prices. So, you can see these are my boundaries. And now I simply observe how prices move within this structure. And then I look at, the key reversals here. I said, this is going to go up a little bit from here. There were some two key reversals right there and this project. So I just look at the prices within the structure, and the market actually points where it wants to go. You don't have to be a genius. You don't have to have an MIT, economics degree to understand where the market's going to go. The market actually tells you where it wants to go. Carl says, what percentage of your trades are shorts? It depends. So right now, more and more, because I think the market's topping out. MB says, is the Dow in a broadening formation? It could be. I think these indexes possibly are. And the Dow is the one that's really flattening out at the top here. So not quite sure. It appears to be. I would say we're very close to a top. I hate to say that because, every time you think this is, let me just pick a different color. So you can see that we have the appearance of what could be an ascending broadening price pattern in the Dow, which would imply some kind of pullback here. And you can see we could just go sideways here, which not even a pullback at all, to get there. But it would imply that we get pulled back to there. You can see that we're starting to flatten out up here. So let's just see how we behave tomorrow. Tomorrow is going to be very telling. Tomorrow and Thursday, where Powell will also be testifying before Congress on Thursday. So the path of least resistance is still higher. So it's kind of been folly to short the indexes. So I've just been shorting individual, stocks like Quantum State, like Zoom, like Beyond Meat, just because, that chart just tells me there's no support here. There's nothing till $10 on this thing. Jan says you were high on shorting Zoom yesterday. So I used I just shorted into a higher price action. I put my limit in Zoom at, so you can see, instead of chasing a lower opening, I waited for a rally to short into, and I'll show you my order. Where is this thing? Zoom. Here, where is it? Sell short Zoom. Here it was. So I sold short right here. I put my limit. That shows as a market order. I'm pretty sure I did a limit order also. So I did a market order and a limit order. Let me find where this was. Zoom. Sell shorts. Here it was. So it opened, Zoom opened today. No, that wasn't it. It opened
Mark, on the
today.
topic of Zoom,
Yeah.
Henny's asking, how do you know which part of the chart to start the trend line?
So today, with Zoom closed around whatever, around 380 yesterday, and then it went down to 375 in the opening. And I was telling people I have a morning session. I was saying, look, I don't want to chase this thing on the downside. I'm going to just wait for it to rally. I'm going to put my limit a little bit above. So you can see I put my limit at 381.50. I think the high of today was 384.50. And so I got filled on 2,500 shares at 381.50, and now it's 378. So I've got about a $3 profit on 2,500 shares, about 7,500 bucks. So basically, I just used the daily charts. I showed you what I'm analyzing on the daily chart, meaning that I had both the pattern, and so I try and come in every day with a plan, right? Because if you don't have a plan and the market's moving around, that's how you get emotion. You start chasing things, and what have you. So, like I said, this was my email yesterday to our subscribers. I saw this pattern, this ascending broadening price pattern. And then I saw also these key reversals, made a new high, close on the low, made a new high, close on the low. Both of these things tell me that this thing is pointed lower out of this ascending thing. So what happened was we opened and we started going straight down. So I like to see the market go into some part of the previous bar. So I just had my order resting, arbitrarily. I just picked a price somewhere above yesterday's high right there. So what happened was in the morning, it opened and went lower, then it went higher and it picked me up. Now, typically, I don't like doing that. I like shorting into, so if I'm looking to go short, what I like the market to do is open higher. I like to short it there and then watch it go lower. I don't really like to see it kind of go lower and then come back the other way. But I, felt confident that I really want to be short this thing by virtue of this pattern and these key reversals. So that's where my entry was, about 381. I also short some at 382. And you can see that it hung out there most of the day. And by the end of the day, it then just dropped down. So now I'm short. So I just used this daily chart to see the pattern and then the price action. So while it was an arbitrary pick, just saying, hey, I'm going to short it at 381, I knew where my risk was, and that was at 391. So this is going to be my risk, and this is what I see as an outcome. So I decided that risk reward was worth doing that trade. Richard says, do you trade any crypto? Any views on Bitcoin? I don't trade crypto. I leave that to my wife. She loves those things. I can't understand them. Their history is just too crazy. And I have my own views on it. I don't think it's worth anything. It has no value. It doesn't generate any money. So I don't understand where the value comes. It's a social contract. It's what people agree the value is. So I think that this thing's going to go a lot lower, but I don't pretend to understand it. You hear these very respectable people, who have now normalized. It's going to be too big. Sorry. So I just look. I trade it like I would any other instrument, and the problem is that this thing has got a very kind of weird history. It's very difficult to understand, but frankly, I just see this as, a pattern like I would anything. You have a double top and this thing looks like a head and shoulders. This whole thing looks like a shoulder. So, kind of actually, and there's a lower shoulder down here if you want to draw it that way. And this whole thing is just sitting on this neckline here. And once it goes through 30,000, there's nothing but air. And so the distance from 30,000 to 65,000 is $35,000. Let's say you just drop 60% of that or 20,000. This still puts you at $10,000. So I think this thing's still going to go a lot lower. But what do I know? Yeah, I think that thing's, and look, it would have been nice. My wife had it till, since 4,000 and it ran to 65,000. I was begging her to get out of it 65 grand. But even then you start thinking about, okay, should I buy something like this? And then it came down to, I found myself saying, well, should I buy this thing? Everybody in the world is saying it's going up and it's going up. But then you say to yourself, okay, if I get in here, what's my risk? Where's my stop loss? And so, if you don't understand it's all about understanding risk. And so it's not about where this is going from here. I told her, let it go up another 1,000%. Let somebody else make that. But, I couldn't, you just can't understand the risk. And if you can't understand the risk on something, then you can't trade it. So at $65,000, I couldn't understand where to put my stop loss. And so that just made up my decision for me. How do I get in a trade where I don't know what my risk is? To me, it's all about the risk. Where Zoom goes, if it drops $50, it'd be nice. But, I'm comfortable that I got in an area where I'm comfortable that I understand the risk and that I'm very unlikely going to get taken out on this thing. And even if I am, it's an acceptable risk. And I'm a big boy and I'll dust myself off and find the next trade. It's all about risk and reward. And if you can find, an area where the risk is being drilled down less and less, that's what it's all about. Mustafa, I don't want to spend too much time on cryptos, but it's probably the same. So this is Ethereum. And it's the same thing here. If you're going to buy there, then you say, well, where's your stop loss? And anywhere is arbitrary, right? So if, you can't understand. So this kind of, has a whole descending triangle feel to it. It looks just like QuantumScape. So Mustafa, you were with me on QuantumScape at 50. So this is, now QuantumScape is here at 20. So, this looks like it's just breaking. There's just no momentum. It's got, just a downtrend here. And, it's very close to breaking this low here, whatever it is, 1900. And, who knows, but I would kind of leave these alone. All right. So, that's
Mark,
about.
how do you look for imbalance on a Forex chart?
What does imbalance mean? I don't know what that means.
Okay.
I just,
If you don't, I don't.
I don't try and make it any more complicated than this. So this could be any price chart. I just try and look for patterns and price action, and then try and set up a trade that I can justify on a risk reward basis. So I don't know what imbalance means. It sounds like a very fancy word for I don't understand.
Okay. All right. Jan is asking, can the ascending triangle in Zoom start in mid-May?
What's this now? Oh, yeah. So I see what you're saying. So could you say this whole thing's an ascending triangle, just like pound versus Australian? Yeah, you probably could. So this whole thing could look like one. So, and that's a good catch, by the way. So that really would be the lower boundary where it could do this or come all the way back here. And I think it's the latter. I think we're going to come back there. So this price level, this retracement's about 365. So, even if it drops out of here, it looks like it should go to 365 at least. But that was a good catch, whoever asked that question. So yeah, that whole thing could be looked at as an ascending triangle, ascending broadening triangle.
Mark, a question over from YouTube. Benjamin is asking, would it be advisable to short the New Zealand US?
Yeah. I was looking at that tonight. Whatever Powell says is going to move the dollar tomorrow. And, New Zealand US has, kind of looked heavy for a while. This is the weekly chart and so you can see that this is starting to, have the appearance of a nice double top here, with the key reversal right in the middle of it. So, the market tells you where it wants to go. It just takes a lot longer to get there once it tells you. So this guy here, this key reversal, said that it's probably likely to go lower, but it may take 3 months for that eventuality to come to pass before it does that. So buried in there's that reversal, and then you have these two mountains here forming this double top. And now you're sitting on this neckline. So I think, it's likely that the next move is going to be lower. So yes, I think New Zealand US is going to go lower. You can see we're sitting right on this trend line now. So any break below here is just going to open up kind of a new move lower. Thanks, Mustafa. I appreciate it. Anything else off YouTube, Dwight? I'm not watching it.
Yeah, another Fadel is asking, is cat still a sell?
Yeah, I was looking at that and I would think so. It's got a big governing double top above here. So that's the weekly. It's a little less. So this is Caterpillar. And it's sitting on a nice trend line here that should give us a lot more information very soon. So this kind of looks like Tesla before it dropped to 550. So you kind of have a double, if not a triple. So you have kind of these two here, but you could look at that thing, that entire thing is maybe an Eve and Adam double top. But the word is it still is a top. So I think that is still going to likely govern or dictate. And then you kind of have this funky, head and shoulders. But this is the key thing to watch here, how this plays off this long-term. You connect these prices, they connect pretty well. It's amazing how the geometry of these prices line up. And there's no coincidence. You can see how this thing bounces off this line. And now if we revisit it, it's probably likely not going to get a warm handshake here. It's probably going to do that. So I would watch this 210 area. It's kind of locked up in a trading range here. It could do anything, but my gut tells me that reversal, is gonna, so yeah, I think this is gonna go lower. If you're aggressive, you could short it here with the stop above today's high. If you're a little bit more conservative, wait for a breach of this. But this, this kind of tells me that the next path is lower.
All right, another question from Kelly. Would you consider Tencent to be sitting on a huge big base right now?
What's the symbol for that?
Ticker symbol TCEHY.
I may or may not get it if it's it's not listed. So yeah, this shows you that there's no liquidity when something bounces around here, but all these Chinese stocks are getting punished because the Chinese have just changed they're just punishing capitalists. So this looks, very ominous. It looks like it's going to drop. It's got some support right here at 65, but this thing looks like it's rolling, and probably next thing will go lower. So someone asked for a Tesla, and then I'm going to leave it there. I could, look at charts all night, and I've had a long day. So I think Tesla is also going to break lower. I think it's at a nice inflection point. So this is what I was talking about on Caterpillar. This is what Caterpillar looks like right up there, and then you had this break. But also Tesla is like Caterpillar, sitting on this long-term trend line here. But I just feel like it's in a triangle, and it's going to come lower. So you can see that Tesla was bouncing off this trend line. Just amazing how it bounces. And so if you kind of come back here, I think it's going to open up a huge move. So right now you're in a bit of a triangle. You're, betwixt and between. So I'd watch both these things, but you can see how you had a key reversal there, you had a reversal there, and this feels like it wants to go lower. So this feels like the governing pattern. So this looks a little bit like Caterpillar does. You can see you kind of had a head and shoulders here, and it gave you a nice move lower. So I just feel like this is not going to get taken out. So I just feel like this whole thing is setting up for a move lower. It's kind of looking like a descending triangle, and we could be right at the top of this triangle. And so, it just feels like we're coming back there. And if we do, we're going there. All right, Dwight, I'm going to leave you with the video. So I've got a book. Or I could just share the link, Dwight.
Yeah, I have the link. I don't think I have a video though, unless it's the
Okay, yeah, it's
same
not a
video from
video. It's
yesterday.
not a video. So,
Okay.
I talk about my setup, what I look for, the pattern, the 4-step layered plan, the trend, the pattern, the insurance day bar, the execution. So my book really, lays this out. And the nice thing is, whatever you can pay whatever you want. So it's a pay what you want. And whatever you decided to pay, 5, 10, $100, I double that amount and I donate it to the American Childhood Cancer Organization. So last year I donated around $25,000 from all of the royalties that I collect from my books. So whatever I collect, I take that amount, I double it and send it to so that it's going to a worthwhile cause. And this will also give you everything you need to understand what I've been talking about. So like I said, it's pay what you want. Come here, you hit the link, and you could pay anything you want. $1, $5, $10, $20, $100, whatever you pay, I will double that. So John says it's a great book, must have. So John, thank you for all your support. Mustafa, thank you for your ongoing support. I appreciate it. And Dakin, thank you very much. I appreciate your comments. All right, guys, I'll see you back tomorrow, 4:30 Eastern Standard Time. Have a healthy and prosperous trading day. Tomorrow should be a doozy with the Fed talk. I think the markets feel like they're topping out here. So I am a little bit more on balance short. All right, Dwight, thanks a lot. I'll see you tomorrow.
All right, Mark. See you tomorrow.
Thanks.
All right, everyone. Just grab the link out of the chat. I'm gonna replace it here, and you can grab that. I'll be closing the webinar in just about 2 minutes. All right, bye everyone. See you tomorrow.